Hey, traders. Welcome to our weekly Sunday evening show. The market is just open, so we're taking a look at a very early, we'll take a really early look at the indices as we kick off this show, this session, and you'll see that as we are reopening for the Sunday evening. Now think about who's awake. This, of course, is the Asian session opening, just a little bit lower on the open, not a significant gap in any way on the open, nothing shocking at all. As you can see here, as we take a quick look at the three big indices. All right, so that's what we've got to kick off our Sunday. Bonds are pretty much where they ended the day on Friday. Gold pretty much sitting at the previous session close, Friday's close. US dollar and euro. You can see here on the euro, a little weaker, which means that US dollar is a little bit stronger. So pretty interesting, but not necessarily a shock in terms of where we are for the open of this week. And welcome to the show, as always. All right, so what we're going to do here to kick off the show is, kind of what I do to kick off my week, and it really starts on Sunday. Let's take a quick look at what is going on this week on the calendar. Tomorrow, Monday, July 11, we do have FOMC member Williams, so that's going to be probably about as high impact an event as we have for the U.S. market. We do have some Bank of England events here, but I will tell you, I've been leaving the British pound alone because of everything that's been going on politically in the UK. So until that political situation settles down with Boris Johnson, who's going to replace him, etc., I'm going to be very cautious on the pound, on any of those UK markets. So I'll leave that on the back burner for a bit. So even though Bank of England, Governor Bailey speaking, it's just not on the radar at all. So again, Williams at 2 p.m. Now, those of you that are taking or have taken my most recent class, day 3, our first day, by the way, of Elite live trading is tomorrow at 9:20. And if we think about what we'll be setting up for as we complete that 9:30 to 11:30 trading window, we will keep in mind that Williams will be a big part of sort of the afternoon reopening and what that next day trading window is going to look like. So a lot to look at tomorrow. It's going to be nice that, unlike Friday's session, which was an amazing look, if you're part of that class and you haven't caught Friday's session yet, please watch it. It was really, for me, it was a challenging day. We had a great non-farm payroll trade, and the rest of the 9:30 to 11:30 window was challenging at best. However, having a tick by tick, blow by blow breakdown of risk management and stop losses, and that process of position sizing and knowing when to exit, that was very much, in many ways, inadvertently, a masterclass in risk management. So check that out. Looking forward to a much easier calendar tomorrow for our day trades. Taking a look at the rest of the week, more Bank of England Governor Bailey. Again, don't care. And pretty quiet. Once again, a really good quiet morning. Quiet mornings are fine for day trading because that means that we don't have an 8:30, 9, 9:15, or 10 a.m. hot zone scheduled, high impact, high volatility release. And we could just look at, in many ways, rely on price action a little bit more so than have to worry about these higher impact volatility moves, which is, from time to time, they're great. Non-farm payroll was a nice trade, but non-intense hot zone mornings can be really nice as well. Moving into Wednesday, and this is really, from a data standpoint, where the week is going to begin. More inflation data, CPI, And we get into going into Thursday, PPI, FOMC member Waller are, of course, our weekly initial claims. And then into Friday, core retail sales and the University of Michigan consumer sentiment. So hot zones for Wednesday, Thursday, and Friday. And that will be interesting. On Friday, I will, for the class members for our elite trading, we'll have another 8:30 hot zone session. So I'm looking forward to that. We'll do another hot zone session for that particular event, much like we did for non-farm payroll this previous Friday. All right, so that is what we have right now in terms of what we know is scheduled. Of course, remember that if you haven't already, always do check out, by the way, the trading economics calendar, because sometimes this will have different events. So we know Williams is on Monday, right? But take a look. We've got Barkin on Tuesday, and that was not on the Forex Factory calendar. Scroll through any other FOMC negative beige book on Wednesday. That could be interesting. Wednesday, 2 p.m. Waller Thursday, which was on the Forex Factory. And then Bostic. See, Bostic wasn't on the Forex Factory. So when you scroll through the tradingeconomics.com calendar, keep an eye out for those FOMC speaker events that may not be on Forex Factory. So this is a good reason to keep an eye on both. So we got our hot zones laid out in front of us. We know when those events are going to hit. So let's go ahead and jump into, as we do, your questions. And we'll take a look at what's going on in terms of market structure. And we'll take a look at our sentiment, momentum, and trend readings. Gang, those three things combined give you your market structure. We measure those with the trade flags or the multi-chart if you have it. I'll grab my drawing tool so I can highlight those as we go through the analysis, because inevitably and necessarily, right, we have to start with what is the look the market is giving us. So if you're wondering, okay, Rag, grab, right? Grab, that's number one and easy. We can look at the wave too, but grab and wave are pretty much the same conversation. Then if you've got the trade flags, which, by the way, you have free if you're a member of any of the Simple Trading main rooms, of course, including my mastery. But if you're part of my mastery, you've got this, which is the supercharged trade flag. That's the multi-trend. So as we go through our analysis, we'll talk about sentiment, momentum, trend, and directional bias, and understanding what the path of least resistance likely is. And that boils down to market structure, gang. Pretty simple. Dow 101, right? It's about as old and classic a mindset to understanding the markets as you can possibly have. And I love classic market, old classic market type, really sort of mindsets and strategies. All right, first up, hey there, Nick. How are you? I really appreciate the opportunity to ask questions. Well, I appreciate y'all showing up and asking them. Otherwise, this show would be really short. In any typical market condition, how would I trade the VIX and or its derivatives? So when it comes to, and I'm so glad, Nick, you phrased your question the way you did. Thank you. There is no typical market condition. In fact, what we have to remember is that market structure, market condition, whatever the wording is, has to be first. We have to have the best clarity that we can possibly get from our tools. And again, at minimum, everybody watching this can absolutely have the grab and the wave on their charts, because these are tools that I have given away for free for as long as I've had them. This is the wave, the 3 moving averages here. And then, of course, the grab candles or the color-coded candles that you see on all my charts. So there is no typical market condition, right? Always up, down, sideways narrow, sideways volatile. In the case of understanding VIX, so the way I look at it, Nick, just pull up VX. I don't consider VIX just a market internal in any way. It's a futures contract, and I can trade a futures contract. Does it offer some insight into risk appetite, risk aversion, support, resistance for the broader averages? It does, but I like to trade it for its own clarity. And in terms of that clarity, Nick, last time we were at the 200 propulsion, here we are closing in on the 200 propulsion. We've got a Darvis signal right there. We are in a neutral market trend. A lot to like about possibly moving back higher off this zone. A couple ways we can highlight this zone as well. And you can see that I've done it already with the Darvis levels. Here's your yellow right there. There's your yellow level right there. I'm going to make that a smidge thicker because I don't know, for whatever reason, I'm having a hard time seeing that today. Oh, that's a little bit better. Yep, you can see that zone right there. Absolutely in play. That is nearly an oversold zone. Now I say nearly because if you're using your slow stochastic, 21K, 3D, we're just about oversold as well. The closer we get to that 20, the closer we get to that low level, the more clarity we have about the zone possibly being oversold. So that's how I would trade this, Nick, scenario that we have right now. Now that's on the daily time frame. Now, if you want to look intraday, then it would be, a set of intraday tools, a set of intraday times, a set of intraday windows, and the clarity that we're getting at that moment. The VIX, I'm going to treat like it's any other symbol. Does that make sense, Nick? It's not something that I treat in any other way. If we were looking at corn and not the volatility index, I would break it down the exact same way with the exact same tool. So thanks for the question, Nick. And I think that's one a lot of traders are curious about, because a lot of folks look at the VIX as a market internal and not a futures contract in its own right. It's a market. It's a market like bonds or Apple or anything else. So we always view it through the idea of what would I want to do with any symbol in the condition that the wave, the grab, Darvis, slow stow, etc. are in. So thanks for the question. All right, Groot. If Fed futures are showing hikes peaking at 3.5%, well, yeah, anywhere from 3.25% to 3.5% or 3.5% to 3.75%. Won't the ZB rally? Well, we're not done yet, right? We're not done hiking. So remember, Groot, it's a good question. At what point do rates stop moving lower? Well, remember, we still have, well, let me show you. Let's go here to the rate. I mean, right now, let's remember where we are now. So our target rate, sort of where we seem to be expecting to top out, is either 3.25% to 3.5%, or, and this became a little bit more in focus last week, 3.5% to 3.75% with that huge NFP number. This seems to be where we're going to end up, this particular column on the Fed Fund futures graph. Well, think about where we are right now here to this target. We still have a ways to go. We still have about 2% more. So bonds can't fall yet because yields are still going to be going up for the Fed Fund futures by another 2%. That's on a small amount, right? That's on a small amount. So not yet. But to your point, I do not anticipate lower lows in bonds. I do anticipate the market heading back down into the range because that's what we have now. But I do not anticipate, say, getting hammered through, say, the 131 handle on this chart. Great question. A little too soon to take advantage of that discounting. And there's no setup there. There's no setup yet. We need support. We need confirmation of that support. Then at that point, it might make some sense positioning ourselves in an oversold buy setup, but not yet. Thanks for the question. Hey there, Randy. Good evening. Kindly remind me, okay, how much profit have my futures and options accounts made since January of this year? Randy, I had the screenshot. You might want to check out the video from the webinar. Check out that video from the webinar. I think I've deleted the screenshots of my account numbers. I don't think I have them. Maybe I do, maybe I don't. But you can check out the webinar. I'm up. I'm up nicely. Do I have them anywhere here? That might be the screenshot from the webinar for my futures account. And I think this is the one for my options account. So the options account was 10 or 11,000, right? And this was 25,000 starting amount. So hope that helps. But you know what? Let me mention this. I made money. And it doesn't, this is what I want to make sure everyone understands. That's what happened earlier this year. When you look at, and this is drilled into me because being a Forex and futures trader for most of my life and then teaching, you're keenly aware of the reason they always tell us the disclaimer. I'm supposed to always remind everybody, past performance does not equal future result. And this is so true. It's not just a disclaimer, gang. If someone shows results from 2020, which I almost never do, it's 2022 for crying out loud. Who cares what I did in 2020 when the markets were going straight up, right? My cat could have fell asleep on the keyboard and put together a winning portfolio, let's face it. So past performance never is indicative of future results, right? So that's what I've done this year. I think that there's a high probability process. That's the only reason I come out with a class and with indicators, because we have a high probability process that we've tested, usually, if not for multiple years, through multiple types of market conditions. And what I think that the HPMRs, those were figures from the HPMR class that I did. What I right now am doing, and which is working really, really well in this choppy market, is taking advantage of time and volatility. Now, there'll be a time where maybe time and volatility work and trend following works again, because right now trend following is not working that well longer term. There might be a time where volatility ranges and breach retreats work again. But right now, I'm fading, right? I was looking for my, where is it? I have this great image I used to use. Here it is, Darth Vader. This is what I'm doing right now. When the markets start to trend, I'll shift again. So always remember, gang, that's what I did do. Doesn't mean that that's going to be the same market structure that I have going forward. And that's in no way to discourage anybody. In fact, the beginning part of this year was pretty tough trading. The earlier part of the year for about a month was really difficult. And then it got a little bit easier. I say easier, levels held a little bit better as we, as traders and investors, had a better idea of what the Federal Reserve wanted to do in the way that they were going to message it. By the way, I'm really optimistic about the second half of the year because the messaging is about as clear as the Fed could possibly make it. And so I'm much more optimistic, not about moving higher or not about moving lower, but about the clarity in the structure of the market, because we can recognize momentum and trend. You put that sentiment, momentum, and trend together, those three things, you've got your market structure. And we can measure all those things like I talked about earlier. So I appreciate the question, but I always feel that I want to tell everybody, gang, that's what I did. Some folks might have done better. Some folks might do worse. And that doesn't mean the next 6 months will only be that. And that doesn't mean the next 6 months may not be worse. I don't know. But if someone said, Rog, what do you think about the next 6 months? I think they're going to be better than the previous 6 that we have been trading through. So very excited about the remainder of this year. We have a much clearer path to where we're heading with those rates. Next up, Joe asks, what would I do with Tesla? I would look to short it. Not necessarily from where it is now, although maybe not that far from where it is now. Well, let's go through that process. What are those three things again? Sentiment, momentum, trend. Sentiment, momentum, trend. What is my sentiment here? Sentiment meaning what are people thinking? Because what people think then maps to what they do. And whatever they do for a slightly prolonged period of time is ultimately the trend. Trends don't happen in one day, right? Trend is the persistence. Trend is the consistency of a very specific way of thinking and then behaving. Bearishness maps to shorting. Bearishness maps to less buying. So that's what I mean by sentiment. What are people thinking? And then what's going to be their preferred way directionally of entering the market, long or short? That's all I mean by that. The next thing is, what do I think about then? Momentum. Momentum can be bullish in a neutral market for a short period of time. It could be bearish in a market, even if it's neutral for a short period of time. So momentum is short-term action. It's a momentary opinion. If that momentary opinion can continue, then eventually sentiment plus momentum equals trend. Measuring that with the wave, measuring that with the trade flags or the multi-trend, and of course the grab candles. So we always want to keep in mind that structure is made up of those things, and this is how we measure them on our charts. And the trade flags, the grab candles, and the wave are tools that I give members free. And if you're not a member of any of the services yet, go grab the wave and the grab from countdowntrader.com. If nothing else, you can at least use those. Green is bullish, red is bearish, blue is neutral. I mean, it doesn't get much easier than that. Look at all the red, Joe. Little bullish right now. What's the sentiment? We're in the bearish hemisphere. We're below that 200 propulsion. The trend has generally been heading lower. I'm going to give the trend the benefit of the doubt, as Charles Dow talked about, well over a century ago. Therefore, I would continue to focus on an overbought short in Tesla. I would not get bullish unless you're looking to shorten the time frame and do something a little bit more, say, as a day trade, perhaps. Right. So thanks for the question. I think a lot of people are wondering, what's up with Tesla? It's not the same downtrend that it was, but gang, it's still pretty bearish. It's still pretty bearish. Now, there's one more thing we need to remember, because we're going into earnings season. And you'll see here, 720. All right, Rog, what do we do with that? I'm going to drop a big red line. Well, it's green here, so let's make it red. That's a no, right? This is where the volatility is coming in. And that's on the 20th. Now, go 14 days, right, to the 6th now. What's the 6th? This is my window where I stop trading, for the most part, Tesla. I can day trade it, that's fine. But I will not look for clarity on the daily time frame or longer time frames in that 14-day window. Inside that 14-day window, implied volatility is actually more beneficial to options sellers, which I am not a habitual options seller. I like to buy directional debits, long calls, long puts. In that window, my strategy is at a disadvantage, because implied volatility starts to increase and it favors traders who sell premium. After the 20th, we get to look at the reaction of earnings, watch the dust settle, and then we can re-engage the market. So I would keep it very short term, preferably day trading. Between now and then, I would love to see this level hold. Let's say you want to go ahead and short in this area. Please be out before earnings. By out, I mean flat. So Lisa, Joe, yeah, there's that Tesla breakdown. All right, next up is, what is the best way to find a bottom in growth stocks? Well, first of all, we don't know a bottom's a bottom, right? I mean, I think we can all agree on that. If anyone's been watching me for any period of time, we know we can watch for a bottoming process, but we don't know if that's going to hold, right? It's no different than finding a bottom in anything. So finding a bottom in growth stocks is no different than finding a bottom in tech, in value, in whatever, in communication. So a bottom is a process, and we can identify that in any market. Probably what I would recommend is last Thursday. This will explain it really, really well. Head on back to the Simpler Trading YouTube channel and go to my video. There it is. Light at the end of the bottom. Come on, check that video out. It was just 3 days ago. I explained all the reasons why I do believe we're in the beginning of that bottoming process. We can see the light at the end of the tunnel. No, the light at the end of the bottom. So check that out. I'll continue to update that video either in my next free video or some free video coming up. I'm sure we'll talk about it in Charts and Coffee as well. So check that out, my friend. And then if you still have questions, let me know. But that's about an 8-minute video. Really important. If you're wondering from a longer term time horizon, longer term time frames, dailies, weeklies, what am I seeing? What am I doing? That video is the beginning of that conversation. If you're a member of the Sector Secrets Mastery, my clubhouse, or the Futures Room, check out the premium video. Check out the video that I sent you all on Thursday. That's a much longer, more in-depth discussion of what we started there in that video there. If you're interested, again, in that longer term approach and not guessing in some kind of bravado play of this is the bottom, I explain why and I explain what we're watching. And that's really, really important. So thank you for the question. Where do we get the grab for free? John, countdowntrader.com. This site. So this is the homepage, countdowntrader.com. Scroll down and see where it says free downloads. You click on, no, they're available for TradeStation. I think they're still in the App Store, or I don't know what's going on with the App Store, quite frankly. I might need to update the access to this, but Thinkorswim is what most of our traders use. So Thinkorswim, and then it takes you to a box.com folder where I've got the downloads, the Think scripts that you can download and then import into your Thinkorswim. By the way, if you're on TradingView, the free indicators are in TradingView to search the indicators for simpler, and you can download WaveGrab. But yeah, just go there. I don't think we even ask you for an email address. Just click on it. Actually, I'm going to click on it right now. There you go. Propulsion, Darvis, and this is Grab and Wave. So help yourself. All right. Countdowntrader.com. All right. Our Forex Factory and Trading Economics calendars paid. No, they're both free, Gordon. Yeah, I try to share with you all as many free tools as I can, frankly. And I give away probably 80% of the tools that I use also for free, or I have free versions of them. So no, I'm a big fan of, as much as I can, I give away a lot, and I love using free tools too. So yeah, for sure. They are very good sites. I would check them both out, Gordon. Thanks for the question. Randy, do I provide all my day trading futures trades to the Sector Secrets trading room? When you say provide, I do not alert day trades. I don't believe alerting them in terms of, let me make this super clear. And this will probably hopefully drive it home. This thing, you cannot trade from it as your day trader. You cannot day trade from this thing. Too fast, too much information to take in, too slow. There's so many things that, you gotta be at the helm, as I like to say. So in order to not suggest in any way that someone's going to sit on their iPhone and compete with someone like me, who's been doing this for 20 plus years in front of 9 monitors with about a 800 or 900 meg internet connection, I don't want anyone to be under any circumstances thinking that day trading should be done from a phone. Now, swing trading, entering longer term time frames in your portfolio, oh my gosh, I probably do that on my phone 60-70% of the time. That's fine. Slower, limit orders, conditional orders. You can place an alert. That alert, much slower process, much more realistic to do from your phone. So I don't alert out day trades because I don't in any way want to suggest that you can day trade from a phone. However, what I do is actually better. If you're in the room with me during any of my day trading sessions, y'all have seen the notes, right? Y'all have seen the notes that sit on the left margin. If you haven't, it's me almost live blogging what I'm doing in the market, what we're looking at, why, what's on the radar. Then we get a trade. All the levels are there. So rather than having to hear me say something audibly and hopefully you catch it, or waiting on an alert, which is not simply not going to be fast enough. You have the live discussion in the room. So I know that's a huge answer to maybe a question you really didn't ask. So Randy, starting on July, what's next Monday? 18? Yeah. I believe starting on July 18. And we will get that out to the Sector Secrets Mastery folks. So if you are a member of the Sector Secrets Mastery, I'll likely talk about it this Friday in the AMA. And if you are thinking about it and want to know, okay, Rog, what do I day trade with you in the Sector Secrets Mastery room? Every morning, Monday through Friday, from 9:20 to 10:30, I'll be with you all during that hour of that window, because that's where the bulk of my trading ideas come. So we'll be doing that in the Sector Secrets room every morning. Now there's 5 day trading windows. I couldn't possibly be with you for all of them, but that window that I'm with you all for that time, 9:20 to 10:30 Eastern, that is my favorite. It's my most active. So we'll be together 5 days a week now in the Sector room. Now, by the way, those of you that came for the portfolio analysis or the portfolio longer term analysis that I do for longer term trades, position trades, and those of you that love the swing, we are still doing that. We're going to have specific session for that as well. So there's going to be an update, not a new. We're supplementing the current schedule. We should be getting that out to you probably sometime later this week. So really excited about that. This is the first time we're going to be segueing out of a day trading class and into the ability for those of you that took the class to join me in the room and trade live with me in my mastery. So I appreciate the question, Randy. Thank you very much. All right. So next up is, let's see. Are there more FOMC announcements than a year ago? So Trader Momo, you've been following me for 11.2. Wow. Gosh, thank you. It seems to be way more than a year ago. Yes. So why are they talking so much? We're in the midst of a monetary policy shift. We're shifting away. It's a 180 that this Fed is making. We had a very accommodative monetary policy, meaning we got to low rates and we stayed at low rates for a prolonged period of time. And then now we're shifting back higher. So this is where, and I think they're actually doing a really good job. This is where they have to speak. This is why they're speaking, because there's a significant shift going on. So they're not always as active, although it seems they're probably more active than they've ever been when I think back on 30 some odd years. However, there's a reason, and it's because we're in the midst of a monetary policy shift. So thank you for the question. All right, next up is, how often and where should we be looking for the HPMR updates? So the HPMR updates is two, I won't say versions. Well, there's 2 packs. In the futures room and in the Sector Secrets Mastery, we have the index futures, ES, YM, NQ, RTY. In the futures room, we have those plus the DIA, SPY, IWM, and QQQ. Those are free packs that I've made available for years, and I will continue to make that particular pack, the index futures and the index ETF, in those 2 places available to members of those 2 rooms. And by the way, that's the most requested and probably the most popular of the packs that I'm giving away with the membership. And they get updated all together. So it's not as if you're getting a delayed version of that when they're free. Not at all. Either I'm going to give you something really good or not at all. The other pack is the premium pack. Now the premium pack has more, well, currencies, treasuries, metals, energy, stocks, ETFs. It's a much more complete pack of what I look at when I am day trading. And remember, please, HPMR's hourly price movement ranges, I created them to be a day trading tool, an intraday tool. They can be used on time frames 60 minutes or less. I prefer 5, but 60 minutes or less. As far as how often are they going to be updated, Lauren and I keep an eye on beta. We keep an eye on volatility. We're looking at when volatility contracts or expands sufficiently to merit a brand new run of data. And mostly, I'd say you're going to have 2 to 3 updates per month, roughly 2 to 3 updates per month, generally speaking. And they're going to be available in the My Indicators section of the site. So the My Indicators is where you would download your premium indicators from Simpler. That's where they're going to be available. And by the way, I do want to mention this. For those of you that took the elite class, remember, you get a year of updates with the class, which frankly cost as much as the class, but you're getting them basically included. I don't want to say for free, but yeah, it's kind of BOGO, sort of. All right. If you want to take the elite class and you want the class plus the full year of updates, please do that before this Friday, gang, because after that, the class will be one price and the indicators will be another. So this is when the class and the indicators are going to be bundled at an incredible price. And then a standalone, they're going to be, I don't know how much they are, $1,200 plus, $1,200, I think. It's $100 a month. So, if you want that now, I would do that before Friday. Okay. So anyway, that's a little HPMR for those of you that are day traders. If you're not a day trader, don't worry about HPMRs. Okay. Are propulsion dots the same as grab? No, John, they are not. They're completely different. Propulsion dots are the dots where I set 2 exponential moving averages looking for crosses, etc. So not quite the same thing. No, but if you watch, me at Charts and Coffee or any of the rooms, or even here in our Sunday show, you'll see that I use them much like I would use a moving average, but they're better than putting, say, a 55 or 200 or 13 or 8 moving average, because as the way I look at them, they self-correct. They turn on and off depending on whether or not they would be a better level to consider support or resistance at that moving average. And then in that way, I think they're really a fantastic evolution of what those propulsion dots are. Okay. So that's it, gang. That is it. So if you want to check out any of those tools, feel free. Definitely the grab and the wave. All right. And I will see you all for Charts and Coffee tomorrow. All right. Be good to each other. As always, thanks for your time. I'll see you all in the next update.